On Tuesday, July the 18th, 2023, the Nigerian stock market experienced a continuation of its upward trend with a significant increase of 449 billion naira in the total value of listed shares. The market concluded with a modest increase of 1.31%, pushing its worth to 34.7 trillion naira, setting at 63,766.72 basis points. This signifies a minor rebound from the previous day trading session, closing at 34.2 trillion naira. In terms of trading volume on the local stock exchange, FCMBs took the lead in yesterday's market activities by exchanging at 153.880 units of shares worth 956.075 million naira, followed closely by Japan Gold and Dangote Cement, with trading volume at 110.536 million naira and 104.882 million naira worth of shares respectively, and corresponding market values of 90.9 million naira and 3.5 billion naira respectively. Let's also tell you that a total of 802 million unit worth of shares corresponding to a market value of 42.807 billion naira were exchanged in 8,977 deals. Joining me now live virtually here in Lagos State to give us more detailed analysis of these figures is a stockbroker and equities trader at Planet Capital Limited, Dr. Paul Uzum. Good morning. Many thanks for joining us on the program. Okay, I believe you've seen some of the trading activities that played out at the capital market yesterday. I'd like to get your reaction to trading activities yesterday. We've seen a positive margin at the exchange, just as we experienced a mixed trading activities at the exchange last week. What is your reaction to trading activities at the exchange? Okay, we're still trying to reconnect with Paul Uzum, who's trying to give us detailed analysis of some of the trading activities at the capital market yesterday. Paul, can you hear me now? All right, for the want of time, we'll take a short break to reconnect, and when we get the connection back, we continue with this conversation. Just stay with us. Glad to have you join us again. We've reconnected with Paul Uzum, who is joining us now to give us some reaction to the performance at trading at the exchange yesterday. Paul, if you can hear me clearly now, I'd like you to continue with your submission at trading activities at the NGS yesterday.
Okay. Yesterday, trading activities centered on Dangote Cement because the company splashed as much as 35 billion naira in a share buyback program, buying over 104 million units of the company's shares from investors who have held on to these shares over the years. And that singular activity lifted the stock from 230 naira to 252 naira yesterday, a gain of 6.67%, lifting up the market all share index to 1.31%. Thereby making the year-to-date gain. That's this year. The market has gained 23% so far. Now, at this time of the year, we've already started seeing the market has started seeing results coming out from from a number of companies. Since yesterday, we saw results coming from FT and Cocoa. The market's already reacting to it, and investors are already taking part. Since a week ago, many investors started taking profits on many securities that they've held over since the beginning of the year that have recorded a significant appreciation. So now that we're seeing results coming out, those results are going to reinforce, are going to make many investors to reappraise the investment decision they've done so far to see whether the current prices of these securities, which have rallied significantly by on the average 23% this year, to reappraise them to see if they actually justify the current pricing. FT and Cocoa, for instance, has been one of the stellar securities for the year, rallying from less than 60 something kobo at the beginning of the year to rally to over 3 naira this year. But now the results have come out. We are seeing that's the half-year results. We are seeing disappointing results from the company, which has caused a sell-off in the stock. So we expect to see similar action in many other securities, which the prices do not justify the rally that took place in those securities earlier in the course of the year. Then we're also expecting that by next week, before the end of this month, many companies will be releasing their half-year results, which will give investors opportunity to undertake a holistic appraisal of the markets to pass judgment on all listed companies in terms of their current pricing, and that would trigger maybe a new buy decision on those ones that outperform investors' expectation, and a sell decision on those ones that underperform. Today's market condition is showing a flat market. Market is just flat. So we just imagine a gain of 0.02%.
All right, thank you for that insight there. Paul, before I let you go for the want of time now, I need to ask you this question. A 2-1 question. I hope we'll be able to get a reaction to that in less than 30 seconds. The first one is, how is the market reacting to the inflation rate that came out on Monday, 22.79%, and then the hike in the price of petrol? That's on one. And then secondly, today happens to be the midweek trading activities at the exchange. What is your projection as we look forward to the figures yet to be coming out today?
Okay. The first question is how the market is reacting to the increase in the inflation numbers. The market reaction is muted, though we're not convinced that the inflation number is correct. From the reality on the ground, we think that inflation should be far higher than what is being reported. No one is so sure. Well, maybe perhaps when we see the subsequent numbers coming from the Bureau of Statistics, we would be able to see if it confirms what our expectations were. Also, on the increase in fuel price, we already know, the market already knows that we are in a deregulated market regime. So we expect to see more volatility in the price of pump price of petrol, and that has already been rising into the oil and gas stocks. To mention, this year the oil and gas sector has outperformed all other sectors. It has gained 2% from the beginning of this year to date, and that was driven by the deregulation of the sector and the expectation that the numbers for financials that will come from these companies would improve significantly post deregulation. So now that the market has really priced it in, we are looking forward to see the results of the companies, this half-year result, to see if it actually justifies what we are thinking, as the performance has improved significantly or not. I think that's it. Yeah.
So what's your projection for today's trading activities?
Well, it's hard to say. Market is just flat at the moment. But as numbers, we've just seen market reacting to the result of FTN Cocoa. That would send a shockwave on many penny stocks that rallied earlier on. So that would that may cause a bearish pressure on a number of securities that don't have fundamentals to match their prices. However, for the market we are just 1 hour 15 minutes into the market since market opened. We still have about 3 hours to trade. So it's hard to say now at this moment how the market will close, to be determined by demand and supply forces. However, I think that markets would likely close positive because of the effects, the spillover effects, the shockwaves from the Dangote share buyback, wherein as much as 35 billion naira worth of shares were bought yesterday. So investors have released those securities, gotten cash worth 35 billion. Many of those investors will be looking at where those valuing stocks with strong fundamentals, where they will place those money. Notably, I think most of the PFS, local PFS, international investors, who they participated in this sales yesterday. So I expect those money to come back into the market in trickles. That may cause some uptick in the market, likely because the market is up 0.03% at the moment. And before the next 3 hours, we'll be sure of the direction of things. Yeah.
All right, Paul Uzum, equities trader, stockbroker at Planet Capital Limited. Always a pleasure having you talk market on the show this morning. Thank you for your time.
Yeah, thank you.
As we shift focus away from stock market now, let's tell you, still to come after the break, despite major headwinds confronting household and businesses in recent months, the Nigerian economy has remained resilient in the first half of the year with a growth forecast of 2.92% this year. We have more details in a moment after this time out. Just stay with us.